Good morning. It's Friday, April 4th. What a sell-off, and the sell-off continues here this morning. And I was wrong that Powell, he does speak here today. It's probably better anyways, so we can see the full scope of the carnage here in the markets. He's scheduled to speak at 10:25 a.m. Central Time. So stocks, they saw their steepest decline since 2020. The Dow dropped 1,679 points. Silver was down 7.7% yesterday, and the gold-silver ratio up here near 100 to 1. So thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. Let's do an equities data check here because market has just accelerated their sell-off here as of this recording. I saw a headline that came through here on the Bloomberg terminal, and it's retaliation here, and it's pretty bad when I have that section in my notebook called retaliation. I feel like I'm in a bad high school relationship, but China will impose a 34% tariff on all imports from the U.S. starting April 10th. That's according to an official Chinese news agency. So when that news headline came out, we saw crude oil futures break another 6% here, so down $4.40. The S&P 500 down 143, Nasdaq down 500, Dow down 1,000 points. Silver under a little bit of pressure, but did have a little bit of a lift as gold futures came up $10 at 31.32. We're seeing platinum under pressure, copper under pressure, palladium under pressure. Soybeans, one of the big movers, down here quite big, dropping back below $10, hitting 988 last here, and that's the low of the trading session. So looking at other things that I'm watching, stocks, they fell globally. We've got to track that here with the MSCI global benchmark on track for its biggest weekly loss in 7 months, and it's the intensifying trade war that's going on here. Remember yesterday I talked to a lot of people and we saw this big sell-off in the metals, and I told people that I felt that the US provided the worst case scenario, and the question was, do we take the next leg lower because of the retaliation that comes in? And we're specifically monitoring the European Union and China just came out with that announcement, and that announcement is reflected in the markets here today. So looking at some things that are also coming out here, we will have the monthly jobs report coming out 7:30 a.m. Central Time. The expectations are for 137,000 jobs here created with an unemployment rate of 4.1%. You want to see the number come in better than expected, and the reason is because things are so negative right now. It would take this positive turnaround here, at least in some of the market data, to get some of the recession talks off the table a bit, and that could provide some easing to the market. What level of easing? I have no idea, but we just want to stop the carnage that's going on here at the market. So this sell-off here is boosting a rally in the treasury markets and also in the bonds here, with the 10-year bond yield falling below 4% here. So 3.86%, down 18 basis points here, and we're seeing the 10-year note make new fresh highs, the bond market making new fresh highs, up 2 handles here. So you could see that people are really bracing for an extended period of heightened global tensions here. So commodity prices just getting hammered across the board. It's the global growth concerns that are out there. So oil down 6% yesterday. We're down 6% here today. Gold futures yesterday fell about 1%, and really it's the rotation that's going on a bit and the profit taking that is underway here in the market. So, crude oil, many of the clients working with me in that particular position here have taken more defensive approach, have taken more, put hedges on in that position. Gold here yesterday did a lot of adding in that market here. Many people called in specifically for silver, but if you look at the end of the trading session, which commodity was performing better based on adding those positions both at the same time, it is the gold market here. Now, I'll be very interested to see how silver does hang on given the extended sell-off in the copper market and the gains that are going on in the gold market right now. So it just did clip 100 to 1 on that particular gold-silver ratio. So things we're going to be watching here. Now we got to add in the CME's Fed watch tool with a 21% probability of a Fed cut here in May. June still being the most anticipated period for policy easing. And there's also, like I said, a noticeable shift here in the yield curve. So traders, They are increasing their expectations for the Federal Reserve to cut interest rates this year, with now markets showing 100 basis points of reductions by the year end. You don't think Trump wants to see lower rates? I mean, he's property sector intense as far as his holdings, and he's probably very susceptible to needing interest rates to come down here for his own personal benefit. So I wouldn't be surprised to see that this being the catalyst here that helps him out in that respect. So, that's just slightly off topic here. Don't want to get too political whatsoever here, because videos that I do like this that are covering gold and silver, they get suppressed by YouTube and by other news networks because of the fact I mentioned politics and tariffs and things like that. So looking at the ETF flows here from the previous trading session, again, this is another very important. So throwing in things like Powell speaking, what's the retaliation, what's the CME Fed Watch tool showing for cuts, and what are the ETF flows. So total gold held by ETFs, they rose 6.3% this year to 88.1 million ounces. That's the highest level since September 28, 2023. Gold up 19% year to date. So the exchange traded funds, yesterday they added 100,000 ounces to the trading session here. And then the ETFs, they cut 833,000 ounces of silver yesterday, bringing this year's net total purchases to 2.57 million ounces. So silver ETF flows slipping a bit, gold increasing a bit. So again, gold-silver ratio, now it is over 100 to 1 here. So someone was asking me yesterday about silver reaching $100. I mean, I got to be honest with you. We got to break $35 first. And in order to kind of put things into perspective here, yesterday, largest one-day dollar and percentage decline since February 2nd, 2021. You're down for the last 5 trading sessions. You got the lowest settlement value since February 28th. And to put things into perspective where we've been, you oftentimes want to take kind of a step back. That's why I look at charts from a long-term perspective. That's why I do the chart pack, which is a little bit longer-term perspective. Those of you get the Metal's Edge, you're getting more intraday trading and tactical placement of where positions are going. If you're looking for longer term position, you want to look at the chart pack for your key levels, your trend lines, and things like that. Your larger things, and the longer that it goes back, the trend line, the greater the strength that it has, in my opinion, for holding support levels and resistance levels. That's why that $35 acted as a pretty solid ceiling on the silver market, because it extended back so long. So we're going to want to look at long-term support levels on that silver market. And again, to put things in perspective, we're about 8.75% off the 52-week high, which was 34.89. That was March 27th, just about a week ago. And then we are up 20% from the 52-week low, which was 26.39. So we might look at some fib retracements, some 50% retracements, some 38% retracements on the charts here. Throw that in the chart pack. Another topic that I get questions on all the time is emotional control when it comes to trading. And I believe that there are 2 characteristics one needs to be in successful trading. And I think you have to have equal parts on both these. You want to be 50% aggressive in your trading. Why? So you make money. But you also want to be 50% defensive in your trading. Why? So you keep your money. So I'll leave it at that here. It's going to be a busy day here. A little bit shorter of a video, but these markets are really moving here, and the headlines are really gyrating the market. So have a great weekend. I'm going to be working on the house all weekend long. The wife's got a laundry list. Drops off a laundry list of things I got to do here. So you guys got any questions, reach out to the trade desk. Shoot us an email, info@Blue Line Futures, anything you want to discuss. And remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading. Go get them.